Ladies and gentlemen, welcome back to the channel. We have a massive catalyst coming this week for Tesla stock. That is Q2 deliveries on Thursday. I'm going to give you a little bit of a ballpark estimate of what I'm expecting. I haven't done my official estimate. We tend to be very correct on this channel. We tend to be one of the most correct sources for Tesla deliveries. And I'm going to give you a little bit of my opinion. This is not a final estimate, and it will likely change heading into Thursday, okay? And I'll probably give you the final estimate maybe on Tuesday, give you a little bit of time to kind of prepare yourself before Thursday's number. But in today's episode, we're going to talk what's going to happen to Tesla after Thursday. Now, Thursday's a big day. We also have a looming potential government shutdown, which is still not resolved. So that's going to be important, and we will talk about that in this video as well. Now, a lot of people may not know, but the last 8 trading days, and also including Monday and Tuesday, are the worst 10 trading days throughout the year. Okay, so Monday and Tuesday, we still have a bit of that seasonal weakness. And then starting off on Wednesday, we get into October. Things from a seasonal perspective start to get better. Okay, and that's worth highlighting at the onset of this video. So even through all of these September seasonal weakness historicals, Tesla has done very well. And I do think Tesla will continue to do well as long as that Q3 number on Thursday is better than expected. So we're going to get into all of that. We also have 2 clips from CNBC I want to share with you, one of which from Dan Ives and another from the Wesley Group that says this is the last good quarter for Tesla for a while, which I think it's important to highlight. I also think Q4 is going to be a very strong quarter as well. So yeah, we have work to do in this video. Hit that like button, subscribe to the channel if you have not done so already. Check out that link down below in the description of this video as well. Now, we're going to start off this video with the clip from Dan Ives. Dan Ives now has a $600 price target on Tesla stock. He says Tesla could be as high as $1,000 per share by the end of next year. So take a listen. It's only about 3 minutes long.
We are back on Closing Bell. Tesla leading the Mag 7 this month, and one top analyst doubling down on the name. Let's bring in Wedbush Global Head of Technology Research, Dan Ives. Dan, you are getting even more bullish on Tesla. Tell us why.
I mean, look, I think this is now going to be the start of probably the most important chapter of growth ever for Tesla. In terms of autonomous, I believe we're going to see 30 cities, potentially over the next 3 to 6 months. And that's going to be the start. Because, Courtney, my view is that they will own 80% of the autonomous market. And that is not being factored into the stock. I mean, that's why I think this is $2 trillion for starters. Ultimately, will be a $3 trillion market cap. This continues to be, in my opinion, the most undervalued true AI play in terms of physical AI play out there.
But how long is it going to take them to get to that type of market share in autonomous?
Oh, I think as we go into later this year, and I think especially once we go through the shareholder meeting, when Musk gets pay package and ultimately Tesla gets approved for the XAI investment, I think investors are going to start to realize when this gets rolled out to another 8 to 10 cities over the next few months, and you start to see the scale of ultimately cyber cabs, I think that's where the bell goes off. I think investors right now, there's still skepticism because of the core business, which is actually stabilizing. We'll see that next week. But I think this is all about autonomous and robotics. I think this, along with NVIDIA, the 2 best physical AI plays in the market. And Musk now is back to wartime CEO. And that's what you need in terms of this AI arms race.
Wow. And so your target is going from 500 to 600. And I think the average analyst estimate is somewhere around $342. And you think that is all because of autonomous?
Well, yeah, because I think when you look out, when you think of golden goose for AI, it's autonomous and ultimately it's robotics. And that's going to be Optimus. And I think Tesla right now is on the verge of what I think is going to be a period of hypergrowth. And I think that's something that's not being factored in, is a lot of investors just continue to paint it with the same brush. And all the work we're doing is showing that this is an acceleration that's about to happen. That's why we raised price target, continues to be one of our top picks. in this fourth industrial revolution.
Do you think that there's still some political backlash with those that didn't agree with Elon Musk or don't agree with Elon Musk and his association with the Trump administration, whether they're enemies, friends, frenemies? I don't know where they are right now, but how does that play out into demand for the vehicles themselves?
Yeah, I think you almost have to separate. I think, look, in Europe, there's clearly still brand damage, and we see that in terms of the numbers, but I think some of that is going to fade, over time, as well as in the U.S. Look, still could be, like we said, 5-7% permanent brand damage, but I think the broader view here is that they're really going to own what I view as the autonomous world, the autonomous market. And you talk about with Trump and the BFF to the enemy and back now. I think it's all about regulatory. I think Trump administration is going to accelerate the federal roadmap in terms of what's going to be bullish for autonomous. And that's going to be, very important in terms of laying the groundwork for what I believe is going to be acceleration of this autonomous strategy. And I think that is how Tesla is going to be viewed. This is not just for Tesla, but for Musk, most important chapter of growth in its history.
So Dan Ives says that Wall Street is getting it wrong because Wall Street is still painting Tesla with the same brush. And we are about to experience a hyper growth phase for Tesla. Now, if Dan Ives is correct, and we have 30 cities with robotaxis operating in them, yeah, like that's true. Like we're gonna have a hyper growth era. I mean, like, we all understand that, okay? I agree, okay? It's hard to disagree, especially when you now have Elon Musk that is working in your favor. For a long time, I said on this channel that Elon has zero incentive to do anything positive at Tesla. Like, until he had a compensation package, there was no reason for Elon to ever say anything positive about Tesla. No reason. It would just make his compensation package harder. Like, I literally talked about this a lot. Elon's first tier for the compensation package is what? $1.5 trillion market cap? Something like that? Okay. Is it $1.5 trillion or 2 trillion? 2 trillion. Maybe it's 2 trillion. Either way, right? If Tesla was a $2 trillion company right now, because Elon had been hard at work getting shit done, his first tier would have been $3 trillion. Would have been great for shareholders, not great for what Elon is trying to accomplish. Well, now Elon is financially motivated to be a driving force for Tesla, which, again, when you invest in a company, you're not really investing in that company. You're more so investing in the leadership. That's what you're investing in. Any company can be taken out by another company. You're investing in exceptional individuals. And what Tesla is doing is next level, right? What Tesla is doing is, again, what Dan Ives said. The only other company that has done what Tesla has done is NVIDIA. What I mean by that is the only other company that has broken into a totally new industry is NVIDIA. NVIDIA did that with GPUs. They basically created the AI GPU market. Tesla is basically creating or launching into, as an already pretty mature company, the robotaxi opportunity, which is a many trillion-dollar opportunity. Humanoid robotics, which is a tens of trillions of dollars in opportunity. You've never seen, at least in a long time, a company besides NVIDIA do what Tesla is doing today. And yeah, that is not reflected in Tesla stock. Now, you are starting to get more of Wall Street that is coming around to the idea that Tesla is going to be the main winner in autonomy, in real world autonomy. And I think this is something that is a gift that could keep on giving for Tesla stock. I think Tesla could pretty soon here be above $500 per share. The fact of the matter is Q3 deliveries come out on Thursday. Again, I'm going to give you a better estimate coming a little bit later on. I think Tesla could be around 510,000 deliveries. The whisper number on Wall Street's about 430,000. I would expect the stock is really pricing at around 440 to 450,000, judging on the recent rally, okay? So you're expecting to beat that whisper number, I think. Like if we came in at 430,000 or 435,000, I don't think that would be taken as like a super good catalyst or number, even though it would technically be beating estimates. Think about it like that. So if I'm correct and we get a number, 500,000, maybe 510,000, you're going to see Tesla have a 10-15% positive day in my view. You're going to make a run to the 500s this week, starting on Thursday, continuing into Friday. You also have the seasonals in September, the week seasonals, coming to an end on Wednesday. Now, big wild card here is, and we don't have any news on this to report, does the government stay open? That's a big question. Typically, government shutdowns are neither positive or negative for stocks. But this time around, when the economy is a little shakier, Fed just started cutting rates, there's tariff uncertainty, consumer uncertainty, labor market uncertainty. Getting a government shutdown on top of that, while I don't think it's a recession catalyst, it is not a good catalyst. It is not a positive. So if we don't have any clarity on that heading into Monday and Tuesday, it could mean a little bit shakier markets, okay, for the first 2 trading days. Now, as I reported earlier, Elon Musk said that Tesla is working hard to scale Optimus. I don't know if that's going to be reflected in Tesla stock, if Wall Street's going to pay attention to that. If they do, Monday could be a really good day for Tesla. We won't know that, obviously, until we start trading Monday, but my solid expectation is this week, we could make a run into the 500s. As I talked about in the previous video, if you did not watch that one at 4 p.m. today, check it out. But the RSI has also reset. You were at about 81 when the stock on September 22nd and back on September 17th. The stock went up, came down, went up, came down. Now it's back up to essentially where it was before. But now the RSI is at 69.58. Now the RSI is no longer overbought. Now you have room to run to 500 before the RSI hits 80. If Tesla went to 500, the RSI would probably go to 80 pretty quickly. But you could even run further than that, right? Tesla normally, when the RSI gets overbought, heads to anywhere from 84 to 87. 89 is not like super crazy, okay? Back in 2021, the RSI got to, 97? Something crazy like that. So inevitably, once you hit that $500 level, probably get another move above that, maybe to the 520s, 530s, 540s. Then you see a little bit of a reset, come back down to 500, right? Reset that RSI, get ready for that maybe November, December move. But if I were to game it out, gamify it, that's what happens. We probably get a run to 500 this week. Over the next 2 weeks following that, you probably get a run to the 530s or 540s in this range. Reset, come back down to about 500, maybe 510, something like that. And then you make that last end of the year run, maybe to even as high as 600, depending on the path of catalyst between now and the end of the year. If we launch Robotaxi in a new city, if FSD V14 launches as expected, things, compensation package gets approved, Tesla invest in XAI, shareholder meeting goes well, all of that, you could start to envision a path much higher than 500 into the end of the year, but a move to 500 could happen this week. Now, I also think another sleeper catalyst for Tesla is the fact that pretty much everyone is expecting Q3 to be the last good quarter for Tesla. I actually think Q4 could be very strong because of the launch in the Model Y in China and the fact that you don't actually have to take delivery of your Tesla in Q3 to still qualify for the tax credit, which technically, if you place an order for a Tesla on September 30th or September 29th and put a deposit down, you're getting the tax credit. you're not going to take delivery of that vehicle until Q4. So some of the demand from the tax credit is going to continue into Q4. Question is how much? Then the other question is how strong is seasonal, Q4 for Tesla? Q4 is always Tesla's best quarter organically. Now you have some carryover from the tax credit, new products in China. You could start to see how Q4 could be a better than expected quarter. So just add that to the thesis. But we're not actually going to get Q4 numbers until, January 2nd? So technically it'd be the start of 2026, but we should have probably pretty good indicators of how demand is doing in Q4 by probably November. Let me know your thoughts on all of this down below in the comment section. I was going to play this clip with you. It says Tesla's Q3 will be the last good one for a while, says Wesley Group's Steve Wesley. He just tends to be bearish on Tesla. He tends to be wrong on Tesla. I don't even think it's worth your time after listening to it. I basically gave you the rundown. Q4 is probably going to be a stronger than expected quarter. And if it's not, we'll know eventually. But for now, it looks like Q4 is going to be a strong quarter. So I think there's more of a chance to have an upside surprise in Q4 than a downside surprise. I'll also reference that all of Wall Street is thinking that same thing. Most people are thinking Q3 is going to be strong, Q4 is going to be weak. It's probably not going to play out like that. And when all of Wall Street is essentially thinking the same thing and they're wrong, that just adds to the upside pressure when they are wrong. So again, let me know your thoughts on all of this down below in the comment section. Hit the like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. If you want to come invest with us, come find these small cap AI winners before Wall Street does. We want to be early. We want to be correct. We want to be little stock market assassins, right? We want to find these stocks before Wall Street does. That's how you make the money. You got to be early. You got to be right. You don't have to be right on all of them. But the ones you are right on are usually big winners. So come check it out if you have not done so already. Link down below in the description of today's episode. We are outperforming all of Wall Street, all hedge funds and institutions this year. Portfolio is up 177% this year. I don't know of any other institution that has returns even close to that. It's not financial advice. You could lose money. Again, don't be a jackass. Contact a financial advisor before making an investment decision. With that said, have a great weekend, and I will see you in the next one.